Hello and welcome everyone to Oil Asset of the Day for the 17th of March 2020, presented by myself, Phil Carr, at the Gold and Silver Club. So first of all, what you need to know as we go into a new week here, oil right now is trading close to $29 per barrel. On Monday, we saw energies and oil in particular drop down over 5% to the downside as we've seen an emergency rate cut from the Federal Reserve on the Sunday open, which really had very little impact on the stock markets and the energies. We saw them close limit down on the session on Sunday. Energies continued their acceleration lower with gasoline, heating oil and Brent crude oil, WTI crude oil, all continuing to fall back towards the swing lows just from last week as well. Now, from a hedge fund and money manager point of view, it's been very interesting. In the latest weeks, we have seen hedge funds continue to build up their sell short positions and take advantage of this tremendous sell that we've seen on oil prices over the latest couple of weeks. Over 1,000 point gap lower we saw in the previous week on the open. Many hedge funds capitalized on the sell short side, but it's been really interesting in the latest week that hedge funds and money managers have started to increase their net long positions and slightly reduce their sell short positions here as well. Brent crude oil has been much weaker in the latest week. You would have seen the update on Friday and also at the beginning of this week as well, where President Donald Trump has stated that the USA is looking to buy WTI crude oil to top up its strategic oil reserves. And with that, we have tended to see that find more support for US oil as opposed to Brent crude oil or derivatives of that. So I would watch very carefully whilst oil does sit below $30 per barrel. We'll see if we do continue to accelerate lower here. The next key level that I've got below 29 to 28 would be a potential tap of $26 per barrel if we continue this move lower. If we don't, and if oil is able to hold at these levels, just sub $30 per barrel, that is where I'm looking for an actual breakout back towards $32 and then $34. Really, we're looking at ranges again. Last week, we saw a 700 point range on oil at the peak there. It broke out 700 points to the upside from the lows of the week. We discussed this last week as well. We wanted to watch out for potential false breakouts on oil, as many retail traders last week were looking to capitalize on the gap fill, and we saw a bull trap to the upside, another retest back towards the swing lows. So last week, over 80% of retail traders were long on oil, and that was when we continued to see hedge funds being in their sell short positions and also reduction in longs. But that's all switched in the latest week, and I believe that's why we're seeing US oil hold up slightly better at the moment than some of the other energies right now. Now, of course, the coronavirus is still very much having a big impact on oil demand, with many airlines now starting to put out the updates that they're advising their staff to take leave now for up to 2 to 3 months. Virgin Atlantic put out a update just yesterday advising exactly that, and we're starting to see more countries go into lockdown, more airlines are grounding their aircrafts, and as a result, of course, that has a knock-on effect with demand for oil. So we are seeing that continued pressure to the downside. If we get another drop back below $28 per barrel, it opens up the door to break the swing lows from last week and then a move down to $26 per barrel. Again, the name of the game right now is staying nimble, making sure that you're taking profit off the table when you get these fast moves in the market. You can trade the ranges. Last week was a great week again just to trade the ranges here on oil, as we're doing very much so with gold at the moment as well. So there's just, with this volatility, it offers some really great opportunities just to be in and out and capitalize on these very fast moves in the market at the moment. As always, watch out for Tuesday's API data, Wednesday's oil inventories data as well, and Friday's Baker Hughes oil recount as well. All of these can be catalysts for some really big moves with oil. So with that, that's been Oil Asset of the Day. And of course, I wish you good trading.